Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we will continue with chapter number 2, that is Accounting Process, and we will continue with unit 3, that is Ledger. All the concepts will be covered in the coming series of lectures. So let's continue. This is lecture number 3. We had already done with the concepts of ledger posting. Let's see the multiple choice questions and how we are going to deal with it. The first question: the process of transferring the debit and credit item from journal to their respective accounts. Accounts over here denotes ledger accounts in the ledger is termed as A. Posting, B. Purchase, C. Balancing of an account. I believe you must have understood that it is posting. Ledger posting is done from journal. Is it clear to all of you? Let's move to question number 2 now. The technique of ending the net balance of an account after considering the totals of both the sides, that is debit side and credit side, appearing in the account is known as A. Posting, B. Purchase, C. Balancing of an account. What do you think? It is balancing of an account, because in balancing of an account, what we do, this is an account, what we do, first of all, we make totals of debit and credit side, and where the total is big, that is over here the total is 10,000, over here the total is 8,000. So what we will do, we will take the greater total, and this 2,000 will be balancing of accounts. This would be balancing figure. I believe you understood till over here. Let's jump to question number 3 now. Journal and ledger record transactions in a chronological order and analytical order respectively, and analytical order and chronological order respectively, a chronological order only. My dear students, it means what? That the journal and ledger record transactions in, see, when the journal and ledger records transactions as and when the transaction occurs. So as and when the transaction occurs, it is to be recorded in journal and ledger. Then the grouping is done and it is known as analytical order. And when the transaction is recorded in a chronological order, over here it is known as chronological order. So the answer is A. Any transaction is occurred, it would find place in the books of accounts. Another transaction occurred, it will also find place in the books of accounts. We had done several questions and we had seen that we record date wise, that means chronological order, and then we follow analytical order also. Let's jump to the next question. Ledger books is popularly known as secondary books of accounts, principal book of account, subsidiary books of accounts. Just check it. So the answer is ledger book is popularly known as principal books of accounts. We had seen in the theory part. We had seen this in theory. Let's move to the next question now. At the end of the accounting year, all the nominal accounts of a ledger are A. Balanced but not transferred to capital and loss account. A. Balanced but not transferred to profit and loss account. Number 2. Not balanced and also the balance is not transferred to profit and loss account. And C. Not balanced and their balance is transferred to profit and loss account. Students, all of you know that we record in nominal account, we record incomes and expenses, and incomes and expenses, these two things, that is incomes and expenses, is recorded where? Is recorded in profit and loss account, that is income statement. That is income statement. But it won't be balanced. So over here, the answer is C, that is not balanced, but their account is transferred to profit and loss account. Why? Because we took them to profit and loss account because we want to find what? We want to ascertain the net profit of the business. We want to ascertain the net profit of the business. Is it clear to all of you? Comfortable? Let's move ahead. Let's move ahead. Let's see the theoretical questions now. The first question over here is, what do you mean by principal books of accounts? What do you mean by the principal books of accounts? We can say that, as we had seen in the MCQs, ledger book or ledger is known as principal books of accounts, and it provides detailed information about any transaction. What we record in ledger accounts? Personal accounts, real accounts, and nominal accounts are recorded in ledger. I believe it is clear till here. Let us move ahead to second question now. The question is, what are the rules of posting of journal entries into the ledger? How we post journal entries from journal to the ledger. So we are writing it. What we do in ledger books, we prepare separate ledger book for each account and entries from ledger posted to respective accounts accordingly. So please write with me, separate books or separate accounts is opened in ledger book for each account and entries from ledger is posted to respective accounts. The word to is written as prefix for recording transactions on the debit side of ledger account and by is used as prefix in the transaction recorded in the credit side of the ledger book. The last one, the concerned account debited in the journal should also be debited in the ledger. But reference should be given to the respective credit account. I believe all of you are clear till here. Okay, let's move ahead now. Let's see this practical question. Journalize the following transaction and post them in the ledger. So first we have to pass journal entry. This is step 1. Then we will post them into the ledger, that is step 2. After posting it to the ledger, we will balance the ledger on 31st December. Let's read the transaction, students. The first transaction is X started business with capital 20,000. We have to draw the format of journal. Draw this format of journal along with me. Over, we, over here we have date, we have particulars, we have ledger folio, we will write debit in rupees and credit in terms of rupees. Let's begin with the first entry. Date is not given, so we will write number 1. X started business with a capital of 20,000. So in the business, cash comes in, cash account debited, and capital will be treated as a liability. So capital account, cash to capital, 20,000. You can write the narration being business started with capital. Let me extend it a little bit because we have several transactions. The second transaction talks about he purchased goods from Y, purchases on credit for 4,000. Purchases made from Y. So we will write purchase account debit. Purchase account debit. From whom? From Y. Who is Y? Y is creditor. And the amount is 4,000. Both the sides. In narration, you can write being purchase made. From Y. Let's see the third journal entry. He paid cash to Y, that is 4,000. Okay, that is 2,000. Okay, so third entry, paid cash to Y. Y account debit, debit the receiver, paid cash, credit what goes out. The rule of real account, credit what goes out. So cash account would be credited over here. We paid a cash of 2,000 rupees, being payment made to, being cash paid to Y. Students, is it clear till here? Kindly take notings along with me. Solve with me. The fourth entry, he sold goods to Z 4,000. Sales to Z 4,000. If I sold the goods to Z, who is the receiver of the goods? Z. Debit the receiver or debit the debtor. Personal account rule. Z account debited to sales. Amount is 4,000. You can write narration as being sales made to Z. Let's see the fifth journal entry. He received cash from Z 6,000. Received cash from Z 6,000. This is number 5. Received cash from Z 6,000. Debit what comes in? Cash is coming in, so cash account would be debited 6,000. From whom? From Z. You can write as narration. Being cash received from Z. Let's see the sixth transaction. He further purchased goods from Y, that is 4,000. He further purchased goods from Y, that is 4,000. Purchases account debit 4,000 to Y account 4,000. He further purchased goods from Y. So being purchases made from Y. Seventh entry. He paid cash to Y, that is 2,000. Paid cash to Y 2,000. Who received cash? Y. So Y account will be debited to cash 2,000, being cash paid to Y. He further sold goods to Z, that is 4,000. Simple. He further sold goods to Z, that is 4,000. Z account debit the receiver to sales account 4,000. Being goods sold to Z. He received cash from Z, that is 2,000. He received cash from Z, that is 2,000. Debit what comes in, so cash account debited. Credit the giver. Who is the giver? Z is the giver. 2,000. Write journal entry. Being cash received from Mr. Z. Students, at the end of this journal, what we will do is we will make totals of debit side and credit side, and we'll check whether the total is correct or not, or similar or not, same or not. 20,000 plus 4,000 is 24,000, 25,000, 26,000, 32,000, 38,000, 42,000, 46,000. I think I made a mistake. Let me use the calculator. You can also calculate along with me. 20,000 plus 4,000 plus 2,000 plus 4,000 plus 6,000 plus 4,000 plus 2,000 plus 4,000 and plus 2,000, 48,000. On both the side, 48,000 is the total of journal. Total of journal. We are done with the journal, and now we have to make ledgers. So step 1 is done, that is journal. Step 1 is done, that is journal. Now step 2, that is ledger. How many accounts we will make? We will make cash account, capital account, purchase account, Y account. This we had already made. Z account, sales account. This we had already made. Okay, so these many accounts need to be made. Just make it along with me. The first account is cash account. Debit side, credit side. Debit side we have date, particulars, amount. We have date, particulars, amount. Capital account. Give the same headings. Date, particulars, amount, date, particulars, amount. The next account is purchases account. Date, particulars, amount, date, particulars, amount. Then we will make Y account. Date, particulars, amount, date, particulars, amount. Sales account. Date, particulars, amount, date, particulars, amount. And at last we will make Z account. Date, particulars, amount, date, particulars, amount. I believe we are clear till here. Let's start with this ledger. Just see this journal entry, the first one, cash account debit to capital account. So entries will be done in cash account and capital account in both the accounts. In cash, we will write to capital. In capital, we will write by cash. The amount is 20,000. So in cash, we are writing, to capital 20,000, and in capital we are writing by cash 20,000. First entry is clear. Let's move to the second journal entry, that is purchase account debited to Y account. So in purchase account we will write to Y debit side, and in Y's account we will write buy purchase on the credit side, and the amount we will write is 4,000 in both the accounts. Purchase and Y. This is the purchase account. So we will write to Y account. The amount is 4,000. And in Y account, we will write buy purchases. The amount is 4,000. I hope you are clear till here. Let's see the third entry now. Being cash paid to Y. So Y's account will be debited and cash will be credited. So in Y account, we will write to cash on the debit side with the amount 2000, and in cash account we will write by Y with the amount 2000. Y and cash. Y account we will write to cash. The amount is 2000, and in cash account we will write by Y 2000. Cash account we will write by Y 2000. I believe it is clear. Let us move ahead to fourth journal entry, and that talks about Z capital account debit, Z account debit to sales. That means in Z's account we will write to sales on the debit side with the amount 4,000, and in sales account we will write by Z with the amount 4,000. So we will record in Z and sales. So in Z's account we are recording it as to sales account 4,000, and in sales we will record Z by Z account 4,000. Is it clear to all of you? Let's go to the fifth journal entry, and that talks about cash account will be debited 6,000 to Z 6,000. That means what? In cash account we will debit Z as 6,000, and in Z we will credit cash. We will write by cash, and the amount would be 6,000. Cash and Z. So in cash I am writing to Z account. In cash I am writing to Z account, and the amount is 6,000, and Z I will be writing cash. By cash 6,000. I hope it is clear. Let's move to the sixth entry now. In purchases account, on the debit side we will write 2y with the amount 4000, and on y's account we will write buy purchase with the amount 4000. Purchases and y. Purchases to y, 4000, and in y we will write buy purchases 4000. Let's see the seventh entry now. Y to cash, that means in Y's account we will write on the debit side to cash, and in cash account on the credit side we'll write by Y 2000, Y and cash. So Y we have written to cash. On Y's account we have written to cash, the amount is 2000, and in cash account we will write by Y 2000. I hope it is clear. Let's see the eighth entry now. Z to sales, that means sales will be debited in Z's account with the amount 4000, and in sales account we will credit Z. We will write by Z account and the amount will be 4000. Z and sales. We will write to sales 4000, and over here we will write in sales by Z 4000. Last entry, cash account debited to Z account. That means what? In cash account on the debit side we will write to Z account. The amount is 2000. On Z's account, in Z's account we will credit by cash 2000. By cash 2000. Students, we had done all the entries over here. Let's balance it quickly. Let's balance it quickly. 6,000, 20,000, 26 plus 2, 28,000 on the debit side, 28,000. We will record 28,000 on the credit side. 28,000 minus 4,000 is 24,000. This 24,000 will be balancing figure. We will write by balance carried down. That is the closing balance of cash. It is the closing balance of cash. This closing balance 24,000 will be the opening balance. Over here we will write February 1 to balance brought down. This is January. Let's balance the capital account, students. It will be 20,000 on the credit side. The same 20,000 we took it from credit side to debit side. The balancing figure is 20,000. It is to balance carried down. Closing date, that is January 31. The very next day, that is Feb 1, 1st Feb, it will act as a opening balance. So by balance brought down, this 20,000 will be shifted from there to here. Okay. Let's see the purchases account. The total of purchases account is 8,000. From the debit side, we took this 8,000 to the credit side. This 8,000 will act as a balancing figure on the credit side. We'll be writing by balance carried down, closing balance of purchases account, closing balance of purchases account. Is it clear? And this closing balance 8,000 will be taken from here to here and will be giving the date as 1st Feb to balance brought down. Is it clear now? Let's try to balance Y's account, Y capital account. So it would be 8,000 on the credit side. We shifted this 8,000 from credit side to debit side. The balancing figure is 4,000. The balancing figure is 4,000 in the Y's account. We will write the closing date, that is January 31, to balance carried down 4,000. And this 4,000 will be the opening balance over here. The date would be 1st of Feb. By balance brought down, that is the opening balance of Y's capital account. I hope it is clear. Let's try to balance these last two accounts, that is sales and Z. In sales account, we have 8,000 as closing amount. We have shifted this 8,000 from credit side to debit side. The same 8,000 is balancing figure. The last date, that is January 31, we'll be writing to balance carried down. And this 8,000 will be shifted from here to here. The very next month, 1st Feb, the date is changing. It would be by balance brought down. This is opening balance of sales account. Let's try to close Z account. This is debit side. This is credit side. This is 6 plus 2, 8. And this is 4 plus 4, 8. So this account tallies automatically. There is no debit balance, there is no credit balance. This account tallies automatically. Students, I believe you must have understood this very well. So over here we have completed this chapter. We have completed this unit, that is ledger. We had done practical questions. We had done theory questions in this chapter. We had solved the MCQs part and we had understood all the concepts very well. For your reference, I'll show you the study mat of the institute ICI and we'll try to understand that what content we have covered in this chapter, that is ledger. Just see it over here, students. We have covered the introduction part. We had seen the specimen of ledger accounts. Posting we had already understood. Rules regarding the posting we had done. How to balance an account we had already learnt it. We had seen several illustrations also in relation to how to make ledgers. We have done a detailed question just right now. For practice, if you want to do it, you can solve the illustrations given in the study mat. We have done the MCQs, theoretical part and this practical problems. Okay, so we'll keep it till here, and in the next class we'll be continuing. In the next class we'll be continuing further this chapter. Thank you very much. Thank you.